one, and we are live. Okay, cool. Right on. What's going on, everybody? Welcome to Wolf. Welcome to another stream. Chat with Mando here. We got Captain Ryan Mara out here as well. And we're going to be talking about trading, doing some TA, some analysis, and some trading education stuff. These guys are elite level professional traders. And so we're going to chat with the guys, figure out what kind of models that they pay attention to, what kind of things get them excited when they're looking at charts, and get them to be like, okay, yeah, I'm going to hop in here. This looks like the move. I know I haven't streamed with Mando and talked to him as much as Ryan. I know Ryan's in my DMs every now and then dropping some predictions, and the guy is scary accurate. I don't know how he does it, so I want to figure out the alpha for you guys today, hopefully. So I'm excited to get into it. But how's it going, guys? What's going on, Mando? It's good to have you, sir.
What's going on, man? Thanks for having me.
Absolutely. Ryan, good to have you as well, sir.
Thanks for having me. Always a great time.
Absolutely, man. Absolutely. And by the way, I was going to say, Mando, if you wanted to pull your chart up and click share, it's the bottom center. It says present, and then you can go share
for
screen.
Sure. I'm just sharing this link out to
perfect.
The group. Yeah,
sounds good. Right on. Yeah, I see some people are hopping in here in the chat. So what's going on, everybody? What's going on, Jake? If you guys could help us retweet the space, or sorry, retweet the stream if you guys haven't already. Helps. The Twitter algorithm is brutal for anything live. It needs to get better at it. So it does help us out a ton. But yeah, we've done these a few times. We've done these with people like Dom and Bits of Wealth and some other guys. And so these are really high level because you can go way deeper than you can on spaces just because we can pull up screens and stuff like that. So we got Mando's stuff pulled up here. Ryan's also going to walk us through some of the things that he looks at when he's trading. Like I said, these guys are great. And so hopefully there's things you can learn. And yeah, we'll get better together. Let's run it. So anyways, I'll throw it over to Mando first. Mando, what kind of trader are you? What's your experience level? Like, how long have you been in the game? And, what kind of time frames do you stick on? Just give us a little bit of context before we dive into the conversation.
Sure. Yep. So I've been at this for a long time, since 2018. I didn't get to a point where I was trading on, I guess, lower time frames until, like everybody else, when COVID had begun, right? You got a lot more free time with the ability to work from home. So, that gave me an opportunity to really look at it more from a shorter term trading perspective. But when it comes down to it, to me, all I'm concerned with is price action. There are no fundamentals. There are, news, data, any of that. It's not something that I am in tune with whatsoever. And I use historical price data to help me predict or anticipate where market is going next. If you're finding yourself struggling right now, it's probably because you're in tune with the reactive state of mind. And currently what we've been really seeing throughout the market, not just for crypto, but also from the indices perspective, individual stocks, we are accumulating liquidity. And when we do accumulate liquidity, you will notice that those breakouts do not break out, and they are actually just generating more levels and keeping things in, somewhat of a quote unquote choppy market. Okay. So to me, price action is all that is necessary. And hopefully tonight I can show you guys how my model has been successful numerous times, not only on Bitcoin, but also across the board with stocks, ETFs, you name it.
I love it. I love it. Right on, man. Appreciate the intro. Ryan, sir, would love for you to give a bit of an intro, how long you've been in the game, what kind of time frames you're paying attention to, what type of trader you are, just some of those for some context.
Sure. One, thanks for having me. Always a great time. Thanks for everything, Cade. So when I started trading was about 2018. So I've been there, 6-7 years now doing this. Really started off just as an investor, just kind of dipping my toes in the water to get used to markets. Then I got sucked into the COVID, like Mando said. I mean, markets were crazy in that time period. And I mean, you could pretty much buy anything at the time and it would go up. I mean, the market was just that crazy. As far as a trader, like what I look for is I'm just concerned of where we're going on a higher time frame basis. I focus on liquidity above everything. So just kind of build conviction based on price movement. If I have a good conviction, I mainly size up in swings, not long duration, but at least like a couple weeks out. And sometimes that actually pays more than playing the day-to-day moves.
Mm.
You can make a lot more money that way too sometimes. But yeah, I mean, for the most part, just liquidity is what drives me and what I focus on the most. Of course, there's other core concepts that I use, but me and Mando kind of overlap on some of the stuff we use, so we can talk more about that on charts.
Yeah, you guys are, especially you, Ryan. You guys really get this stuff. I mean, I've been able to know you for a while now. But okay, so for beginners out there, and you say something like, "I just follow liquidity." How is it that you guys even do that? What does that exactly mean when you're saying you're following liquidity? Is there a certain indicator you're using? Like for someone who's a beginner, is that even something they need to pay attention to?
Ryan, you want me to take this?
I'll start, and then you can just finish. I mean,
You got it.
essentially, the whole market's a big algorithm. You know, when you're retail and you're starting this stuff, you get these beginner guides from a lot of gurus. I mean, they'll show you chart patterns,
Yeah.
and I mean, no, I'm not trying to disrespect them in any regard, but it's not what they think it is, and that's why a lot of people fail. They don't understand that it's algorithm driven, and they have to find where the algorithm wants to go, because at the end of the day, the algorithm's either going to go high, chase liquidity, fake out the shorts, vice versa, etc. That's just vague. Mando, you can go echo or expand if you'd like.
Sure. So, well, for me and my style, to me, there's no indicators necessary to really determining where price will go. Using previous price action will be the tell. So, for example, up here you see there's no indicator necessary, but the whole idea for this is to identify what pool of liquidity we are going to attack, right? So if I were just to break this down in the most basic way, think about it. Go to any high or any low on this specific chart, right? And by high or low, I mean swing high or swing low. And from that point, what is the only logical explanation for what could have possibly happened at that exact price target to drive price in the direction? So for example, I'm back in March 2020 right now, because to me, without having a higher time frame compass or higher time frame draw on liquidity, everything that you do on the smaller time frame is going to be much more rocky. So the whole idea here really is to, okay, what had to have happened here in order for price to put its foot in the ground right here and drive higher? The only explanation for that, whether you know a lot about the market or whether you know nothing about location, correct? So at that point, for every buyer, there's a seller. And at that point, there are orders resting at that specific point. And that is what we would term liquidity, right? Liquidity is money. Without money, this algorithm doesn't move. So an example of this would be go to a penny stock or go to an extremely illiquid crypto coin. You're going to notice that they don't move very much, right? And at that point, the explanation for it would be that the necessary liquidity is not currently present on that chart. Okay. So another example for that would be if you were to go and look at, say, I don't know, any of the, previous arrests when it comes to pumping and dumping. They don't pump and dump Tesla, right? They pump and dump these illiquid penny stocks. And that's because that excess liquidity coming into the marketplace can actually impact price, right? Unfortunately, I don't have the money to move something like Tesla. And that's why I key in on the algorithm and the resting orders that are currently present on the chart to indicate a overall directional bias for me to go off of. So liquidity is really probably the most important thing in terms of my trading style. But beyond that, there are a couple other concepts. I don't know if you want me to get into them now or you want me to get into them later, whatever works for you guys.
Oh,
What do you want us to look at the most, Cade? What's on your mind?
So one of the things, and this is partially selfish, partially because I bet a lot of people in our spaces wonder these things. So there are guys who have just absolutely marked up to the brim charts. And sometimes I'm looking at them and I'm like, dude, you have to be overthinking this. There's no way you need this much information and mark up every single line. Like, it looks like absolute chaos. And I feel like I'm just like, I feel like you're looking at all this information when you really only need to zoom in on like two things. And I've always just thought it was simple, and it comes down to, you're trading in ranges. There's supports and resistance you got to pay attention to. and at those tops and bottoms, you make decisions and people make decisions. And I was just like, I feel like it can be simple. I just don't know because I don't have a decade of experience. And so that's why I was like, okay, I know these guys have been doing it for a while. And they've been trading these markets every single day. And a lot of people vouch for you guys. A lot of people, including myself, know you guys are good. So that was kind of like the main crux that I wanted to work through with you guys on what is the most important thing to be paying attention to when you're looking to be good at trading, or if you're someone who's trading, but like kind of, and you're trying to get to a place where you move out of kind of a trader into, no, I'm definitely a trader.
Sure.
So, yeah, I was going to say, unless you had anything you wanted to add on to what Amanda was saying, I'm down to just go down where Amanda was headed.
Yeah, it's all about time and price. And with that, I mean, if you're something you want to look at in specific, we can break down charts for you if you like.
Let's do it. Sounds good.
But another thing too, Kate, I'll add on to that is that if you're starting trading, you don't need a million indicators. You don't need any actually. But a lot of people think they need so much, but that just complicates things even more. You have to build yourself a model that you can repeat and get consistent with. And if you're always adding a new indicator onto your charts and it's just going to confuse you even more. I did that when I first started, so I just thought I'd share that. I mean, it didn't do me any good.
Yeah, definitely. Cool. Amanda, yeah, I was going to say, if you wanted to kind of pull on that thread and
yeah, sure. I'll let it rip. Yeah.
Yeah.
So, just to kind of expand on that concept of liquidity, of course, there are additional things that we can use in order to refine or really be precise with our directional bias and being on the right side of the trade. Right. So, one thing that I pride myself on, and I think that, the more and more people practice, especially reading price using these principles, is that really every single move that ever occurs on this chart, whether it's from the higher time frame, whether it's on a lower time frame, you should be able to justify that. Now, that doesn't necessarily mean that you're not going to be able to say at one point, well, I could see price going higher, but at the same time, I could see it lower. What is that really telling you? If you could see it from two different lenses, that's probably not something that you want to trade. So to me, in order to find the highest probability opportunities, I need to look at the higher time frame and work my way down into smaller time frames. But first, of course, let's kind of expand on this concept of liquidity and just identifying where price is ultimately going to go. Besides that liquidity point, right, we need to identify our swing highs and swing lows. That is where the market is going to draw towards, right? If you buy into the idea that price is algorithmically driven, the whole idea here is to go find money in order to, I kind of reference it as gasoline for a car. Without gasoline, the car ain't moving. Go to a penny stock. There's no gasoline there. That thing ain't moving. Okay. And that's why it stays in the same place for months on months, even in the most beautiful technical setups that you want to use. Oftentimes they don't move. And I would also like to challenge everybody after this, when we get beyond this liquidity discussion, I want you just to go to your chart, and I bet you for every time we take out a swing high or swing low, you are going to see a massive volume bar come on your chart. That's something, again, that you can back test and you can prove for yourself. But that's where that liquidity is coming. And that's why, to me, having those volume bars, that's actually a lagging indicator. That's not something that's necessary for me to ultimately come to conclusions from. Okay. So now the $1 million question. How do we identify the right pool of liquidity, right? Because we got two, right? We're going to go back in time at first, and then we'll proceed to where we currently stand on Bitcoin in general. Okay. So from this point right here, we have those lows set back in 2022, and we have our high that was dated all the way back into April of 2021. So from this point, okay, I have two separate models. The first model that I trade off of is the one that I named after myself, the Mando model. And then I have a second one, which is the Adnan model, which is the opposite of my model. And that's why it's Mando backwards. Okay.
Oh, wait, that's hilarious.
So,
I like that.
Yeah. So I know for a long time we were thinking of a name and somebody came up with it. And I was like, we're sticking with this one. But essentially, what you had said earlier about being able to identify a range or a trend, right? Trend, range, that's something that I use as an interchangeable term because to me, a lot of people talk about trend is your friend, play the trend, this, that, but they never even tell you how you can potentially identify that trend in the first place, right? People think, oh, price is going up, we have to be in a bullish trend. Not so fast. We need to be able to identify from a larger time frame and look at it from a top-down approach. That way we can actually identify if this, up move is actually just that quote unquote bear market rally that everybody wants to talk about. Okay. But from the perspective of Bitcoin, I just want to be able to map this out. So when we talk about market structure, trend, or even identifying a range, the first thing that we really need to do is target a specific point of liquidity that we have recently taken out. Okay. So from this point of view, when we made this price run from the lows of 2020 up to the highs of 2021, we actually took out this high right here. Okay. By taking out that high, we are shifting market structure bullish, or AKA confirming a bullish trend. And if that's the case, I would then map my range using those fibs, okay? I do not trade using Fibonacci. All it is for me is just a way to map my range, okay? So let me just zoom in a little bit more here and I'll show you. I do not use Fibonacci. You will notice that hopefully after this call, when I show you guys the imbalances, you'll be able to go back and check on every single one of those Fibonacci trades that you have found success using without the imbalance coinciding with that 62 to 79% retracement. That's not going to play. And I could show you numerous examples of a situation where it actually wouldn't play in the first place. So the imbalances are key. Without these imbalances, price is not going to get in and get out the way that we'd want. Okay. But this is just how we would identify the trend. A break in structure, taking out a swing high or swing low, would set our current trend. From this point, ideally for me, for my Mando model, I'm looking for a discount retracement, meaning if we were to map this range, and again, from the lows here up to our highs, I want discount. So what would discount be refined as? Anything below this 50% mark of the range, anything below equilibrium or fair value is what I would consider a discount. You're getting whatever asset you were looking at is in discount territory. These are discounted prices. Anything above that 50% mark of your current range or trend or price run would be referred to as premium. You are technically overpaying for that asset. Okay. Now, if this is the case, right, and we talk about, fair value or equilibrium being right in the middle of a given price run, ideally, think about it. You go to the grocery store and somebody's, or they have a sale on something. You're probably more inclined to buy the item that's on sale versus what's not on sale. Okay. And here would just be an example of how ultimately I'm waiting for price to retrace back into discount of the range and specifically get into an imbalance. Okay. So what is an imbalance? Okay. I want you just to think about inside a given price range, right? You will notice that on either side of certain candles' wicks, for example, here and here, inside of that rectangle, I'm going to erase it just for a second. No wicks on either side of the candle. What is that telling us? That's telling us that price was not contested inside of that specific range. If price isn't contested inside a specific range, we now have an imbalance. Okay. Think about a teeter-totter. If you're on one side and nobody's on the other, naturally you are going to the ground and the other side is going up in the air. Now, for every time price goes back into that imbalance, it's like throwing a sandbag on the other side, eventually going to rebalance that range. Think about a gap fill, right? People always talk about gaps needing to fill all the time. One, it's not really necessary, but two, you will notice that if we gap up and we retrace back in and fill that gap, that is a bullish volume imbalance. That is an area in which we would look for price to get a continuation type move out of. Okay. Am I losing anybody here? You guys following along?
Makes sense.
Yeah, you're good. Okay. All right. So from this point, following that retracement down into discount, I am looking to identify imbalances. Okay. So for example, inside of this candle here, you have no wicks on either side. If there aren't any wicks on either side, price inside of that specific range is uncontested. Okay. And if price is uncontested, my expectation from that point is that price ultimately will get into that imbalance and get out. Think about, not just a generic support. I want trampoline type action. I want price to move quickly out of that imbalance. So this would just be, example number one of price retracing back down into an imbalance. And in this case, because we made an up close candle, this would be refined as a buy side imbalance, a sell side inefficiency. Okay, so there's an abundance of buyers. There are a lack of sellers inside of this specific range on your chart. So when price ultimately gets down into this bullish imbalance, The expectation is, again, we're going to go chase liquidity. Where are we going to find that liquidity? Ultimately, we're looking from a bullish structure. Okay, when we have a bullish structure, we get our retracement down into discount. We're ultimately looking for a run through highs. That high, this would be our pool of liquidity that we would be targeting. Price runs up, takes out those highs, and you have completed your Mando model. Okay. So beyond this point, you get that next continuation. Okay. Same range, same would apply, just a deeper discount into your bullish imbalance. Again, what is the draw on liquidity? Now, if you want to do something funny, because of course, anytime somebody goes over a chart in hindsight, everybody, it's super easy, and it should be super easy to go back in hindsight. Now go to my profile, go at Mando Trading, $BTC. And if you want to go back to 2022, you could see when I started calling for higher prices, somewhere around this range. Okay. And that is, of course, like that's why, you're never going to hear me brag about something that I didn't put into writing. So, but ultimately, there's your discount retracement. There's your bullish imbalance. There's your run for highs. That is a completion of the Mando model for your next run. And then as you continue on, this is what our current range is on Bitcoin at the moment and that we speak of. Okay. Now, here's the one catch on Bitcoin that's a little bit different from, say, a Mando model here. Okay. We have an enormous range, okay, from our lows dating all the way back to November 2022, all the way up to our highs of January 2025. We're well in premium of this range. But here's the catch. This doesn't necessarily mean that I need price to come back down here, okay? From this point, I'm looking at it and saying to myself, is there anything justifying a move down to discount of this range, okay? And this is where that secondary odd NAM model comes into play. The odd NAM model and how we kind of designed it, because for a long time there, I was just trading Mando models. I was just trading discount retracements into bullish imbalances, looking for that run on highs. But then you realize that, especially when it happens on a higher time frame, think about it. Look how long this took just to get down into discount, right? So in order for me to be a well-balanced two-sided trader and not just trading one side, and, if it doesn't go my way, then, I pout and cry on Twitter like a lot of other people like to do. What we, and this was something it took some time to back test. This is something that was most recently introduced by me. But really the giving, the telltale sign for this would be, and I'm going to use NASDAQ as a quick example as well, just to show you that this is not just a crypto-based thing. This goes across the board, stocks, indices, no matter what. But the telltale sign for a discount retracement is going to be the imbalance that sets you down to the downside, okay? So for example, you have a bullish trend here. The formation of the first imbalance here, that is justifying a discount retracement. Boom, there's your first run. First imbalance to the downside, because those imbalances don't just necessarily have to be bullish. They can be bearish as well, such as here. Okay. And this is a perfect example. Imbalance created, price retraces into the imbalance, puke down into discount of the range. There you go. Okay. Now, but from this point where we currently sit on Bitcoin, we do not have that monthly imbalance. So realistically, nothing is suggesting that we need to go to see discount of this current really large range. Until that imbalance forms, I'm not really looking for any downside. I'm actually looking for upside on Bitcoin, especially because we got into this monthly imbalance. We also got into a quarterly bullish imbalance right here. And then you go down into the smaller timeframes. Of course, there could be smaller timeframe fluctuations, but that's not really my concern. I'm looking for something over a long period of time. And that doesn't mean I just need to buy it once and let it ride all the way up. I can trade it to the upside with smaller timeframe fluctuations. Again, low, high, discount retracement into a bullish imbalance. My expectation is that we run on highs. So that even comes down into a smaller time frame. So I'm able to break this down using that higher time frame bias. I think Bitcoin's going higher. I can look for bullish setups inside of our smaller time frames in order to take smaller time frame trades to ultimately get me to my target. So does that all make sense right now?
Yeah. So one question. So towards the beginning there, so that very first, if you go back to below the discount line, so that first big candle that you kind of the bottom green box that you drew down there,
right here. Yep.
Yeah. So what was it specifically about that green candle that
this imbalance here?
For that one, why pick that one versus the one above
right
it.
here.
Yeah, yeah,
Perfect.
yeah. Like, how did you know
Yeah.
that that was the one to kind of look for
Yeah.
on
So
the
let's
trace
come on
band?
over here. Now, here's the thing. You can look at this from a multitude of different ways. You don't need to be a short-term trader or a short time frame duration trader. You don't need to be, looking at this as a, an option swing. You can also use these concepts as a way to kind of long-term invest for yourself. And that's something that I do as well. Now, when I go to, again, and this is a question that comes up quite a bit, so I'm glad you asked it, but there were multiple imbalances here. Like, how do I select the correct one, right? And really the answer is, if the answer is not present for you on your current time frame, zoom out a little bit, go to your next time frame. And ultimately, again, here, I'm just going to zoom this in and pull up the quarterly for Bitcoin. You're going to notice that there's one imbalance here on Bitcoin.
Wow.
So here's the thing again. Now, inside of this particular run, there's always going to be one signature. And this is something that's come up a lot, especially as prices on, say, a NASDAQ or a SPY have been in a, maybe X out the last couple of weeks here, but for the most part, when we're very directional, so when we were coming off of those February 18 highs, there's one signature that's going to occur that almost acts as that confirmation to me, or AKA odd nam, just flipped, right? We talked about odd nam, that inverse Mando model here, where you form the first imbalance down. The same thing would apply to the upside. Okay, so for example, when we get down into a discounted imbalance, you could then look for that odd nam, first imbalance in the opposite direction of that current price run, which is here. You get your imbalance off of that, price gives you another opportunity, and you're gone. Now, this is something that, again, you could use this on whatever stock ticker you want. I just want to show you an example of NASDAQ. So everybody, is familiar with 2022 when we had that bear market. It was a drag. Here's your first imbalance suggesting lower, right? Think about it. We had red candles inside of here, but for every one of those red candles, everybody calling top was stopped out almost immediately, right? And I'm sure if you've been on Twitter over the last year and a half, year or so, you've noticed that a lot of people have been calling for top for a long, long time.
Yeah.
But there really has been nothing, from my point of view, nothing that is, determined based on the price action that was given to us that has suggested a prolonged period of downside, okay? Until you form that first imbalance. Now I'm going to take you down a trip right here. First imbalance, price gets up into that imbalance, flush down to discount. Okay. Same thing. And now from where we are currently, are we about to form this imbalance over the next 21 hours, 28 minutes? Is our downside done? That's the ultimate question. But you might say, okay, well, that's a cherry picked example. That's just from 2022. Let's go all the way back. We're going to go back to the year 2000, where we can, kind of provide some more evidence for this claim. Here's your 2000 high. Here's your first imbalance to the downside. Here's price retracing back into that first imbalance, aka the odd nam. There's your flush down through discount. Okay. Let's go to 2008. The same would apply from your highs, right? First imbalance here, retracement up into your discounted imbalance. There's your flush down through lows.
Wow.
So there's just two examples right off the bat. And here's another one, just from the COVID perspective. One thing that I've noted for a lot of people about COVID was how fast and how swift price dumped and came right back. Okay. Did anything really change, or was it just a Mando model on the higher time frame? I'll let you decide. So let's come on over to 2020 right here. Okay. Inside of this price run, here's your here it is. Okay. This is what we would refer to as a volume imbalance. And because we gapped down, that is a bearish volume imbalance. But ultimately, where's that bringing price back down towards? Low, high, discount retracement into a bullish imbalance for a run on highs. So, you can decide, but that is just, kind of the efficacy and the idea behind how we can wait for that first imbalance no matter what. Just because we get down into a discount level doesn't necessarily mean buy Jim Cramer button.
Right.
You can also wait for that additional level of confirmation. And that doesn't even necessarily have to be on, say, a quarterly. Yes, the quarterly gave you an opportunity, but you can always go down into a smaller time frame, like a weekly or even a daily. Just note that when you go down into smaller time frames, it might just be not as precise. Okay. So like, for example, let's go back to the Bitcoin low that was put in here. Okay. Again, what do we see? I see, let's remove this. Okay. And let's remove this. That's something we'll talk about another time. That's called a breaker. But we had a shift in structure here from your low up to your high. What comes next? discount retracement into a bullish imbalance, there is your run for highs. You'll notice that the first time that we got down into any of those other imbalances on that descent from the monthly perspective, where are we? Monthly, hold on. Here, you'll notice, whoops, okay, in this vicinity here, let's go to the exact price, 27,000. You'll notice that there was nothing suggesting any urgency for price to move higher. There was no imbalance created. There was no odd nam created. First imbalance created, price gets in, gone. Here's just another example of that occurring again from your lows up to your highs. Whoops. Here's your discount retracement into a bullish imbalance. There's your run on highs. Yet again, the same situation here. Discount retracement, bullish imbalance, another run for highs. And then that's where we really had that large range expansion. And, you know, from a higher time frame perspective, we were well in premium of this range. But again, to me, nothing is really suggesting any lows.
So let me ask, and we can bring Ryan in for this. So Ryan, sometimes you'll hit me with a DM and you'll be like, and by the way, that was a great breakdown there. And
thanks, man.
Like I see Snowden saying, Mando's going fast. Well, it depends, right? Like he outlines like a very specific model he's looking for, and basically just extrapolated it multiple times to show how often you can just do this. Like drawing those lines was really interesting because it did seem to just follow that exact pattern each time and go back down. So Ryan, my question is, because you mentioned that you and Mando have similar styles, not exactly the same, but sometimes you look for the same things. So sometimes you'll hit me with the DM and you'll be like, you know, you'll throw a number out of like Bitcoin's going here, or this is the low to snag, or this is the place to pay attention to for like a local low or something like that. Is this also the same model you're following? Is that why you're able to just like somehow you're so scary accurate with some of these predictions that I'm like, what is this guy doing? Like,
yeah, I mean, Mando does a few different things, of course. I mean, he's got his ranges set and things. I mean, I always use imbalances and fair value gaps. You can tell a lot by how, on a higher time frame, how price reacts to them, and that gives you a big sense of direction of where you're going. And like I said, I'm always looking for where price is going, how they react to these fair value gaps and imbalances. I use those. I use a few other things, but those are primarily, I mean, what I use. I mean, again, Mando hates fundamentals and sentiment. That's something different between us. I know
some fundamentals.
Like individual stocks per se. Like when AMD was at 220, and Nvidia was taking off, and all of X was going nuts, saying AMD is going to 400, 500. It's just like they thought we were back in 2021. Very well. I mean, I get it where they're, but they don't understand companies, and there's other things involved with certain things. I mean, why is AMD down where it's at today? I mean, you can look at a chart and you can justify where it was and why it went down on a technical basis, but the fundamentals don't line up. It's not Nvidia, you know. And I mean, but yeah, I mean, like
I can, if you're embracing debate, I can explain my reasoning as to why I don't believe that there's really any, and we can go back to the 1970s on stocks. And obviously we don't know any earnings reports or any fundamentals from back then, and we can go through it that way. But that's just like my explanation as to why I don't think there's really anything that would warrant me trying to guess or make assumptions, right? Why do some companies have earnings reports that are good and they go down, or vice versa? Why do they go down when it was off of good earnings?
You're saying it's like no matter what the fundamentals, it will still follow the structure, and you'll be able to.
To me, I think it's just all algorithmically driven, and at the end of the day, price is going to attack the liquidity that's present on that chart. Especially some things are more liquid than others, but that's like the frame of reference.
Why don't we pull up like a chart of Apple? And I think they have earnings on Thursday.
Sure.
And you can test this. And Mando has a point. When earnings do come out, you see a big wick to the upside, a big wick to the downside. And then people that are betting on their options always get burned. So, I mean, Mando, we could guesstimate what's going to happen with Apple earnings, regardless of what the numbers are.
Sure. Yeah. So, when it comes to Apple, I mean, look, again, historically, we can go back in time. We can do numerous price runs inside of this range if that is something that, you know, would interest people. But if not, that's no problem. But right now, inside our given range, this is the same thing that kind of applies to my thesis moving forward with NASDAQ. If NASDAQ forms that monthly imbalance, I'm going to be extremely skeptical about upside for a little bit, knowing that over the last 4 bear market / crashes, we have a monthly imbalance that would coincide with that, right? So I'm just a little on edge just from the long perspective right off the bat just there. But just to look at it from Apple's perspective here, okay? And I think, again, you know, it's important to go from the top down as always. But looking at Apple's current price run, okay? So we actually have to go back to this just so I can show you why I'm using this low and not something like this, okay? Inside of this price run, you're going to notice that there are actually numerous Mando models that would have occurred prior to the one that we're currently dealing with, right? So here would be your first, this low up to your high. Here's your discount retracement. Here's your bullish imbalance. That's a bullish volume imbalance. Also coincides with a bullish fair value gap or bullish imbalance right here. Okay. And then there's your run for highs. That would be your first. Here's your next. From your lows, whoops. Hold on. Sorry. Okay. Low up to your high, shift the structure here. There's your discount retracement. Here's your bullish volume imbalance. There's your run for highs. That would be the completion. Here's your next. From your lows up to your highs, here's your discount retracement into a bullish imbalance. There's your run for highs. Okay. So that's why I'm using this current range. Now you might say, well, Mando, why are you not stopping your range at that high that we made all the way back here? Think about it. Was there any retracement down into discount? No. Was there any imbalance suggesting that we needed to go see discount? No. Okay, no problem, right? That means that
because it was taken out right there. Is that what you mean?
I'm sorry?
Is it because, so like that green candle right below your mouse just now?
Here?
Like, right there. Yeah, so that one, because that, why? Okay, so.
Yeah, no, I can walk you through it. Yeah. So
okay, yeah,
again,
yeah.
remember, like, and I know it's a lot. I get it. So it's like,
well,
so remember that odd NAM model, right? That whole idea behind at what point are we expecting some sort of discount retracement? That needs to be coincided with an imbalance, right? And, you know, I showed you those NASDAQ examples from 2000, 2008 and COVID. Until we get that imbalance, there's really nothing suggesting that we need to go see discount of the range, especially when you have an imbalance right here. Okay, you have a premium imbalance. Now, is this something that I'm clamoring to buy? I just can't wait to buy it. Not necessarily. I would prefer to get into discount because think about it. The reason why I think I've been able to kind of stay consistent and have success for a good chunk in time here is because no matter what, at any point in time, whether it's again any time frame, but no matter what, this model is structured so that my risk is always going to be less than half of the range and my win is always going to be more than half of the range, right? If I'm buying discounts, that means everything above whatever imbalance and discount I'm buying is going to be a win for me. So, you know, let's say you get it down into that 62%, right? That means my win is 62%, while my loss is realistically, it would be 38%, but it's going to be much less because just to expand, I used the low of the candle that created the imbalance as the stop loss for my trade, right? But this really plays into that same idea with Bitcoin right now. We are in premium. It's not something that I'm totally thrilled about, but we haven't formed an imbalance to the downside. So there's really nothing suggesting we got to go down to discount. And until that discount is tagged, our range is still being established. And that's why I wouldn't use, until that discount is completed, the range to me is just not set in that given price run.
Gotcha.
So does that make sense?
Yeah.
Yeah. So then from this point, again, the same would apply. And you'll notice how each one of these candles, we've not seen any imbalance to the downside here. There was never one, right? So really, this being the first in a really, really long time, this has the potential of forming right here. And that's at 225. Now, the idea behind this would be just because we form that imbalance, it doesn't necessarily have to be, oh, tomorrow it formed the imbalance, it's time to dump. That's not the case. Price can get up into that imbalance. Again, I'll use NASDAQ as the example from 2022. Got to zoom in real close, but guess what? We formed that imbalance. We had a sharp downturn like we did this April, ripped it right back up into it before flushing it down again, down towards those lows. So that would kind of be the idea if it were to form. Now, again, did we get into an imbalance? Yeah, sure. Was it discounted? Not necessarily. This is not, something that I'm thrilled about longing by any means going into earnings, but if this imbalance is to form, I would not be shocked for price to ultimately retrace into it and then go see discount, which is around 156 or 156.63 is 50% of that range.
So the main idea behind these imbalances is that you're able to identify places where price should come back to at some point. So don't forget that's kind of your idea.
Sure. And it's kind of the idea, like imbalance, just the word in general, right? There's an imbalance in price. Price is not balanced in this specific region. And the expectation really is for price to get in an attempt to rebalance that range. But ultimately, you're going to notice, especially on these premium imbalances, that oftentimes they just act as speed bumps. And like, for example, like this acting as a speed bump. And if you are unable to get through an imbalance in one shot, you're going to need to go find some more liquidity. And where is there liquidity that can go be had? And, an imbalance would be one.
Very nice. Very nice.
So, I mean, it's really layered. And like I said, and by the way, just by me showing all of this stuff, I just want to make it clear. I am not always right. I wish I was always right, but I am not. But this, to me, using all the other trading methodologies, my first couple of years, I needed answers. I needed to understand why something would break out. I needed to understand why something would fake breakout. That stuff drove me crazy. How am I supposed to put my hard-earned money on the table for something that could potentially fake breakout? That sounds crazy. Why does a cup and handle work? Why doesn't it work? Why does because I see it all the time. Oh, it was a failed cup and handle. You're really putting money on something that's going to fail and you have no idea why? Are you out of your mind?
It was a failed breakout over a trend line, Mando.
Yeah. So I like that. I just needed answers. And to me, this gives me the most answers. I can justify price movement. It makes sense to me. And you can always kind of justify it. And ultimately, the idea really is at the end of the day, especially as you go down into smaller time frames, like today's price action on NASDAQ, I don't think it was easy. It turned out to be a great day for me, but inside of our own chat, we had half the people thinking we were going to go higher and half thinking we were going to go lower. And I think they were perfectly justified on both ends of the spectrum. I don't think it was a really easy read. And that's the thing. Like sometimes it's not going to be easy. And
do you trade on those days or do you sit out?
For the most part, I sit out. I actually had a pretty good idea that price was going to go higher. But yeah. So, but at the end of the day, my whole thing is I'm not trying to influence anybody. There's no alerts in anything that we do. The idea is to come to conclusions on your own. And of course, if you're completely outrageous, that's when I say, oh, maybe check a higher time frame there and see if you have the range mapped out correctly or something like that. But for the most part, I mean, I think the difference between good traders and not so good traders is to be able to identify two separate theses, however you want to say it, identify them both. And really, if one doesn't outweigh the other by quite a bit, then I think it's probably best to sit that out, when it's something that's, I don't know if anybody listening, go back to my tweet from Thursday. I kind of mapped out the whole NASDAQ move. To me, that was something that was much more right in your face. That was, I don't want to say easy, but that was something that I'll go to the well on that setup 10 times out of 10. Others like today, my sizing wasn't big as a result of of the indecision, but directionally it did work out,
So, two things. One, we're gonna have to shout out Mr. Tyler Martin here to maybe we should do 50 push-ups or something. Like, what do we think? Mando, can you see this comment?
Biscuits, you got to drop and give at least 30. At least.
No, he just comments. I know he's active. I just say he just made a new comment, so he's definitely watching.
he made a funny meme today. He's a good guy.
That's awesome. That's awesome.
Yeah.
Very cool. Okay, well, listen, I would like to jump through into Bitcoin here a little bit.
Sure.
And get some thoughts on how you guys are reading this chart. Are there any price ranges you're looking to revisit that you think like maybe there's an imbalance that needs to be revisited? Do you see us going higher? I'd love to get some thoughts here. Maybe Ryan, if there's any thoughts, also if there's anything you want to, I know we don't have your screen sharing right now, so if there's anything me or Amanda can pull up that would help you out here.
I got Bitcoin up right now. Ryan, if you want any time frame, just let me know.
Yeah, I mean, well, for one, I'll say it's going to be hard to take Bitcoin down just because of the strength that it's had. Even when we've had a 4,000 point drawdown on Nasdaq, when the tariff news started and huge downside in the equity markets, but Bitcoin held pretty well. And if you have the demand, like sailors buying 15,000 coins a week, you have all these companies buying. The downside for Bitcoin is very minimal. I would, if I had to look at a chart and ask myself, where's the downside? Where can we go? I would go down to 85, 86,000 range at lowest, but
Wow.
I don't see us going because before it was 73, 74K. And it came up to, I had 73,600 as my target, came to like 74,000. Relative equal lows down there. I don't like that on a higher time frame. I don't know if you can show that, Mando.
Sure.
But when you have relative equal lows down there, I mean, very big targets that can easily get in a drawdown. But 85, 86, with the demand, that's where I would see us going if we had any downside. But
You're
yeah,
thinking Bitcoin's looking pretty strong though.
I still think we go higher. Even if we get a small pullback, it's not the end of the world.
Yeah.
I know a lot of people will go on X and say it's the end of the world, but every time that happens, it's always the bullish case for something, So I'm not calling for 150K on Bitcoin or 200K, but I would not be surprised at some point when you get rate cuts later on in the year, and when conditions improve after all the tariff noise is gone, you see about maybe 120, 130. That would be where I would see us going. But of course, take it one day at a time.
Definitely. Right on. Mando, I'd love to see what you're thinking as well.
Sure. Yeah. So just to start, and sorry, I have the split. I'll take the split off right now. I'm just gonna have to pull up Bitcoin again. But my thoughts on Bitcoin, I'm actually pretty bullish on it. I would really like to see it kind of begin to decouple from tech. And what I mean by that is, for the longest time, Bitcoin had been running alongside tech. Now, if we are anticipating the possibility of a deeper retracement on, say, a NASDAQ SPY, I kind of want to see Bitcoin, disengage from that. I want to see Bitcoin kind of go on its own here. And I think it really does have the juice to do so. So just looking from the quarterly perspective again, price did get into an imbalance again, not one that I'm necessarily the most thrilled at, because we are in premium of this specific range. So you can go through each one of your price runs to identify that given range. We are in premium, but you'll notice the last two times that we have touched premium imbalances, we have gotten that continuation move. The first being July of 2024, and this being the second. So far from a quarterly perspective, taking out last quarter's low to get into that imbalance was really nice, and look at the reaction off of it thus far. Then I come on over to the monthly, taking out last month's low. Again, to me, that's very good because we are engaging that liquidity, those lows that were put in last month. And so far, again, a nice move out of that same imbalance. Again, no imbalance overhead. That's a good thing for me. Then I come to the weekly, and I think this is probably the most important part for me moving forward. Again, no imbalances from a weekly perspective. Okay, so that's a good thing. Now, here's what's even more important to me. We have the potential over the next 5 days and an hour of creating a weekly bullish imbalance. Okay, you'll notice that over time, for every time that we've had a significant run up higher on Bitcoin, we have created that imbalance to give us that continuation type of move, right? So ultimately, along the way, this is something that I would really like to see form for that continuation type move up to 109,356. Now, here's the thing about my model, and I think this is just trading in general. I think people sometimes get way ahead of themselves in terms of price targets. Like, I think Bitcoin's going to 200, 500, a million, right? All of this stuff. And, while at some point that could happen, I'm not here to say that it can't happen, because I personally have no idea. The thing that I would just key in on is, if we are buying into the idea that ultimately this is an algorithm that is going to seek liquidity, regardless, we're going to see fluctuations in price. But if we can identify a specific point in liquidity, like for example, 109,356 would be an area of liquidity. That's ultimately where I think we draw towards, but then zoom out. We've never been up there before. There's no other additional liquidity pools beyond that. I don't know where price is going to go to. I don't know where it's going to stop. I don't have any information to kind of base that idea off of. Now, then you might say, okay, then what would drive price beyond that pool of liquidity? At that point, I think it's necessary for excess liquidity to come from outside of the marketplace into the marketplace in order to drive price higher. But ultimately, from every look that I have here, this is also a bullish weekly breaker here on Bitcoin. So a breaker is just another concept we use mostly in confluence with the other models that we talk about. But you have a low, high, lower low, break up and through, and we would anticipate the high of that sequence to act as a support level moving forward. So like I said, we don't have any imbalances here from a weekly perspective. On the daily, we are kind of at our what I would deem that showtime imbalance. At this point, we just swept liquidity, got into our final daily imbalance right here. Could we see a retracement down into this 91 range, even into that breaker that we discussed from a weekly perspective? I don't think that's totally crazy, but preferably over the next 5 days, we close above, what's the low? 86,450. That would create that weekly imbalance. And from there, that would be something I'd be interested in for a continuation.
Very nice. Very nice. Yeah, this is interesting. Okay, so what are y'all's thoughts on these various other models? Like what you had mentioned before, I think it was maybe Ryan who was talking about it, but there are like all sorts of analysts out there, and there's all sorts of names for various patterns and charts, and there's Elliott wave and these things. Do you guys think there's anything to them? Like I know sometimes they get made fun of, some of these more famous ones. Do they have the right concepts? Are they just a little bit like, I guess my fear with a lot of them is kind of like how you were saying, Mando. If you can see either scenario playing out 50-50, then like what kind of help is that? And so sometimes I wonder, because there's so many of them out there. I'm like, is that even helpful for most people? Like where should they start, I guess, is my question. You had mentioned before, liquidity is the thing to pay attention to for someone who's beginning and trying to get into the trading world. Do you think that's the right place to start?
Yeah. So here's the thing. I mean, I'm not trying to say that this is the only way to do it. Now, I'm sure, I'm fairly certain that there are people who are using other methodologies and they're having a ton of success. So I don't want to say it that way. My kind of point beyond that would be, especially if it's somebody on Twitter and you're looking at their posts. I mean, I think vetting the posts and vetting the setup itself would be very important in and of itself, right? Because look, even at the end of the day, it's so easy for me to say after the fact, oh, look, Mando model complete. And that's why I try and do it as much as possible, whether we're on live or whether it's me tweeting it out in advance and then me circling back to that tweet later on. That I think, that's like a little bit of a credibility, for example, like for me to say that, I don't know how Ray Dalio does it, or somebody who's obviously shown an immense amount of success is incorrect in their analysis. I think that's totally ridiculous. I'm not here to say that, but my point is, I think this, to me, the way that I say it, the way that it's coming off right now, I just know there's a lot of people in the group listening right now and they're following along, but to me, this is very simplistic, and this really gives a next level understanding of why something would work, right? So like one thing that I've been doing over the last couple of weeks is like, you hear about that cup and handle. When would your cup and handle work? When wouldn't it work? And why, right? Like I was always, searching for that why. And to me, just like using, moving averages, something that moves along the chart, that doesn't really it's very difficult to back test using that. Using a trend line or something like that, I think that's also pretty difficult. Look, I'm sure people have had success with it, but to me, I think just understanding that there has to be something to the whole ICT algorithmic trading component to it. And, you know, hopefully that's something that you can kind of expand off and, you know, create your own model someday. You know, that's one of the focal points that we talk about. You know, we really want everybody to be able to pinpoint something that they identify well, whether it's liquidity, whether it's imbalances, whether it's market structure, premium, discount, breakers, mitigation blocks, London kill zone. You know, there's so many different avenues you can go down with the whole price reading principles. It's just a matter of what makes the most sense to you. What is something that clicks? And when you look at a chart, you kind of, you know, it's you don't second guess yourself, because that's what creates a lot of losses, in my opinion. When you have a setup, you're afraid to take it because you either didn't back test it enough, or you simply just don't have the confidence to execute at a high level. And you know, ultimately that's what you need to be able to do to be successful over a long period of time doing this, you know?
Definitely. Ryan, curious if you've got any thoughts that you want to add, or any of your own analysis?
Yeah, I mean, like I said, I mean, majority of traders go to the most common, you know, patterns that you're given. I mean, people sell courses all the time. Oh, this pattern, but I think what Mando was echoing a lot too is you got a lot of gurus on X that aren't really credible, that are just good at Twitter and sell courses as opposed to help people. But yeah, no, like echoing off of him, I mean, you got to find your own model. I mean, you can study how people trade, what they use, but what works for someone is not always going to work for you. So, like I said, it all comes down to screen time and how bad you really want it with trading, because it's not for everyone, and it's a mental game above anything. So, yeah.
Very nice. Very nice. Oh, we got a question here from Investment Katie asking if we can have a look at the ETH AVAX chart. Maybe we can have a quick look at this. So I'm not sure if this is something you guys ever chart. We don't have to, but
No, we can do it either way. That's fine.
Kind of fun.
So ETH or AVAX, or, you know,
no,
like
the
what?
AVAX chart.
You got a ticker symbol for it?
Yeah, Investment Katie, if you've got a ticker for it specifically, that would be cool.
I don't know if he's
hold on, let me see.
I know he's a big crypto guy. So
he's he also asked about BP. Maybe that's what it is. He said,
he's trolling Surface on that one. He's trolling. Yeah, he's trolling Surface on BP. All right.
No.
Well, look, we can just do them both. I mean, Ethereum and AVAX independently. So to me,
he's saying just AVAX. He's just saying just AVAX.
Oh, just AVAX.
I mean, if you look at the ETH chart, it's down bad for like 4 years in a row.
Yeah. So actually, like, here's the thing that you know, I think going into this year as well, this is something that like kind of caught our eye, and Katie's a buddy of mine. So we've gone through a bunch of these before, but I think something that caught our eye was a lot of these crypto names, really minus Ethereum, looked really good. And Bitcoin obviously leading the charge there. One thing about AVAX, this kind of goes along with Chainlink is another one that also looks pretty darn good. You're going to notice that despite that initial dump, right? And I think this was kind of like conditioning to believing that these are never coming back. But here's the thing. We have a discounted imbalance inside of this most recent run. Again, why would we reject here? Every move can be justified. You have this quarterly imbalance as well. So right now, I'm almost in the camp where I think a lot of these off the beaten path non-Bitcoin names are really at like a make or break kind of point in terms of, are they going to stick? Are they going to zero? Right. I'm in the camp where I actually think, you know, something like an AVAX could actually perform well. And you know, beyond, I think this could be an actual coin with some use case. Just from a, you know, technical standpoint, this kind of meets the criteria for me, at the very least, from a quarterly perspective. And then obviously I could just drop it down and do the same thing. Now, again, like I said before, I think the one that really I wasn't thrilled about in January, and I'm not really thrilled about right now, is Ethereum. I don't think Ethereum looks quite as good as some of these other names do. But discounted, swept previous quarterly low in that imbalance still. We actually have a monthly breaker here, low, high. lower low, break up and through, we would anticipate the high of that sequence to act as a support moving forward. So, I mean, I think, and another thing that I should just add based on everything that we kind of discussed here today is, at the end of the day, like I said, unfortunately, we're not always going to be right. I mean, that's the hard truth of it. I think that's probably another reason why a lot of traders don't, survive. I think good traders know how to take losses. And the beauty of what I think this establishes is structure. And that's something that I really needed, because there were too many times where the 0 DTE SPXs went to 0 for me along the journey. Right. So to prevent that from happening, just by having some sort of structure where I can add imbalances, I could stop out below the low of the candle that created the imbalance, and I can look for runs on highs to take profit. It's kind of all structured before I even enter the idea. So I think that's kind of the silver lining. Like, you're always going to have an idea prior to entry how much money you could potentially win or lose. And I think that's a huge difference maker. And I think that's totally understated throughout. Because a lot of the work that I do, it's pretty much done the day before. And the night before, I should say. If specific points on the chart are targeted and hit, fantastic. That's the opportunity for the day. But yeah.
Very nice. What a quick question here. How often is there any what's the word I'm looking for? Like, some people I know trade maybe 15 to 20 trades a year, and some people are trading 14 to 15 trades a month, 14 to 15 a week. Do you guys have any sort of rhyme or reason in terms of how often y'all are trading? Are they a lot of swing trades? Are you in and out within an hour kind of thing, or what's your typical trading window?
Yeah, Ryan, you want to go first?
Yeah. So, I mean, I'd probably take about maybe one trade a day.
Oh, wow.
Yeah, I mean, if it's there, it's there. It all depends on how price action is moving that day. If it's a slow,
Right.
grindy price action, I'm not going to sit and watch every tick on the chart. and it's just not a day for trading. Now, if I get some volatility, maybe I'll take 2 or 3 trades that day, because opportunity presents you with a lot more setups. So yeah. So, I mean, 10 trades, I would say, on average a week at most. And you don't need to trade every day. Some people think they need to always trade every day. That's really not the case. You always want to trade when you feel like you have an edge in the market, and that the market's right for you. Because I mean, people are, put pressure on themselves, like, oh, I gotta force a trade. And a lot of people make that mistake too when they first start out. So but yeah, I mean, outside of that, I mean, I keep my swings on, usually on monthly time frames with high time frame targets. I mean, outside of that, just maintenance with covered calls and selling puts for premium. I mean, do that too. So, I mean, a lot of different things going on. So, but yeah.
Very nice. How about you, Mando?
Yeah. So in terms of like actually taking small time horizon trades, I really don't take more than 1, 2, 3 a day. To me, anytime you're operating using the higher time frame, it might take a little time for those to set up and digest. And one thing that I'm focused on also is specific times throughout the day where price tends to deliver better. That's also a huge thing for my trading. You're going to notice, especially now that I say it, just go back. You can back test this, of course, as well. Just note, sometimes during the day, price action tends to deliver more swiftly, and that's ideal, especially when trading smaller time frame contracts. In terms of swings for options, I do that as well. Because of the higher time frame uncertainty I have here, with NASDAQ potentially forming that first monthly imbalance, that's something that I haven't had swings opened as a result of that. In terms of shares, I do have names with shares. There are certain stocks that I am accumulating at specific levels, but believe it or not, most of them aren't really associated with NASDAQ or SPY specifically. And if they are, they have a very low weighting inside of those indices. I'm just kind of being a little bit more protective against the potential for a quarterly discount on NASDAQ, which unfortunately we did not get on that downside move. So yeah, we really do go in waves in terms of like, what's hot for the, specific time. For right now, we've been kind of keyed in on indices. But I would say towards the latter part of last year, we really were keyed in more on options and individual stock names. So, it varies based on kind of the conditions that we're seeing overall.
And I feel like this is like we've been going for like an hour, and I appreciate you guys coming on.
Sure.
Sort of like not so much TA, but kind of like a question on people who are looking to get into trading. What do you guys think from like what's been the coolest benefit or coolest thing that's come out of your trading journey, I guess? So you guys have been in the game for a while, like I said. So you guys are on the other end of the grind. You're still grinding, but you guys went through it all. You guys should be able to see some of the success and some of the reward from learning this skill set. What do you think are the coolest takeaways from it?
Time, freedom, enjoying what you want to do. I mean, I still do side hustles and I'm still grinding outside of trading. But I mean, you don't you don't have to be bogged down. And it's, you have a skill that 95% of people, maybe more than that, will never achieve, and you can always come back to it. I mean, just gives you that freedom to do what you want. But I mean, like I said, it's not everything because I mean, I became so addicted to trading at a time where I mean, I'll just study charts and do this, and I didn't have that balance in life. So I think it creates a good balance once you know what you're doing. And yeah, I'd struggle with some mental health issues, being so bogged down into it. You just got that's something I want to bring awareness to too. I mean, this does do a lot on your mental health, so you do have to know when to take breaks and enjoy life too. There's more to life than just charts. So,
is that why you got in as well when you first got into trading? Was it that freedom you were looking for?
Yeah. I mean, a lot of yeah, pretty much. You nailed it on the head. I mean, I can't really say much more than that.
Definitely. How about you, Mando? I'd love to hear some of your thoughts as well.
Yeah. So I don't know. For me, it's really multi-layered. Like for one, I would say I think you ever just fail at something so many times, and then once you get it and you become good at it, it like literally becomes fun. I mean, that's the way that I kind of look at this now. It was definitely not the most smooth journey by any means. It was very difficult to kind of get to a point where you are seeing consistent success, because a one-hit wonder doesn't really fare well. But over time, I mean, I think it's been cool. I have a group of 6 people who really I met very early on when I started the account, and we really like become friends, and we've kind of went through all the ups and downs together, and it is really cool to see how over time it's really dropped off, and we all kind of made it, and Surface being one of them. I met him really early along the way here on X, and I think that's really cool as well. But just the whole idea that you kind of are in control of your destiny, and I don't mean to sound corny or anything by saying this, but obviously it's really cool now to see if I post something and then come back and it goes perfectly according to plan. But the amount of time that I put into watching specifically ICT videos, and then practicing on my own, and then just like to finally like get it and have success with it, it's it's a really different feeling. And I was an athlete my whole life, so to get into a point where you're still in somewhat of a competitive environment, I think it is I think it's good for humans to not just be complacent and continue to strive for better and better and better. And that's where I'm at. I don't want to stop. I don't want to kind of fizzle or plateau. And that's why, you know, when people bring up things, when they see it and they say, oh, look, I've been back testing this and this has worked for me, to check it out. I'm always going to be open to, you know, maybe incorporating something for the open, which I don't trade because I haven't been good at it. I need to find a way that I can improve on my opening, you know, strategy. So it's like, you know, little things like that along the way. I don't think there ever is a, you're perfect, you've met the ultimate goal. And I think there's always something to try and strive for and get better. And that's why I just keep going. We'll see where it goes.
Hell yeah, man. Hell yeah. I'm hyped. I love this. And is there anything, by the way, before we wrap, is there anything that you wanted to show the audience or let the audience know, either on the charts or something you have coming up even, or anything like that?
For me, not really anything coming up. I got a couple videos on YouTube. If you're interested in learning more about the model, you can check out my Twitter page, of course, or pop into the Discord Galaxy Trading. That's where we spend most of our time. But otherwise, no, I don't have any events really planned. And I've been kind of chilling on the streams for right now. So maybe I'll bring them back in a little bit. But my biggest thing right now, let's see what happens with this monthly imbalance, because I think this could really set the stage for us for the next, you know, couple of months here.
Right on. Yeah, and by the way, for anyone who's watching, definitely give these two guys a follow. I appreciate you guys coming on. Of course, if you're on X, right above right above the charts in the video, you can click on their two accounts are tagged. If you're on YouTube, just go down below in the description, and you can find them on X and check out all the stuff that they're doing. Hop in their communities as well. Ryan, I'll throw the same question to you. If there's anything you want to leave the audience with, or let them know about us coming up, or anything of the sort.
I'll just give words of wisdom. I mean, if you're failing, don't beat yourself up. Just don't quit, you know. And it's very basic, and I know it's very simple. The majority of people do quit, but I know there are people out there that do want to, you know, make it a profession and do that. Just don't quit, you know. Takes time, but in the end, you'll reward you'll thank yourself later. Outside of that, nothing really big coming up. I mean, Bitcoin conference in Vegas.
Oh, yes.
About 90% sure I'll be there this year for sure. So I'm pumped about that. Just pumped about everything in the Bitcoin, what's going on in the community. Go Bitcoin. But yeah, just kind of sitting on the sidelines. A lot of seeing how the market plays out here in the next week or two with all the yeah, there's always headlines every day and whipsawing in the market, so you just got to be on your toes. But yeah, we'll see what happens in the next day or so, and then we'll go from there.
Let's go. I'm loving it. Yeah, hopefully we get to go out to the Bitcoin conference. I'm loving the Mando graphics we got all over. This is awesome.
Dunk on the Bears, baby. Let's go. Run Bitcoin.
Dunk on the Bears.
I'm ready for it.
What do they say? They say Bears are right, but bulls make money, or something like that. There's some kind of quote.
Yeah, I mean, just
bulls make money, bears make money, pigs get slaughtered. That's from your favorite Jim Cramer.
That's Surface's boy. Yeah.
Let's go. Right on. Yeah. Well, listen, I appreciate you guys coming on. Like I said, you guys are awesome, and this is a really cool break. I'm gonna have to walk through it again, I think, tomorrow, and go through another watch of this. But this is some really good stuff. So, yeah, Mando, Ryan, appreciate you guys making some time, and everyone in the chat, please do give them a follow and retweet the stream if you enjoyed it. If you're on YouTube, I don't think there's like a retweet feature type of thing on YouTube. So just subscribe and give these guys a follow. So we'll catch you guys all in the next one. We have spaces and streams every single day here at Wolf. Be sure to give us a follow, turn on those notifications so you don't miss them, and we'll see you later, fam. Take care.